Welcome to Thursday Night Stock Charts Live. Um, I need to make a statement. I This is sober October, so every October, I don't know, for the past 5 years or so, uh, no alcohol, but I always do something else, whether it be no carb, heavy working out, always something, a new challenge to do. And this year, I decided to try fasting. So I am on as of the end of this show tonight. It will be day 2, no food. Never did it before, and they say you're supposed to have a moment of clarity. I haven't had that yet. uh, so they say it's on day 3 it begins. So we'll see what happens, and I'll check back in with you folks on Sunday night to let you know how it all played out. But 7 o'clock tomorrow night, we will, unless of course I'm feeling amazing, we will be having a break in that fast, and it's only water, tea, coffee, no creams, no nothing other than that. Tea, coffee, and water. That's it. Mineral water. I found this over in Italy. It's called Aquapana out of Tuscany, and it's the best water in the world. No infused ingredients, no nothing like that. Really good stuff. It's mineral water, no fizzy, as they say over there. Mineral water, no fizzy, not sparkling. So you'll see me drinking a lot of water tonight, as I'm supposed to. And let's share my screen. And we're going to talk tonight about a couple of things, a few things. The primary one is it time to buy gold? I have a bull case, I have a bear case, and we're going to talk about the mining stocks. But usually I lump them all in. Gold, miners, not tonight. We're going to segment them out because we need to, because one's a commodity, the other one is an equity. So let's get to it. Let's begin. We'll talk about the economic data. We're going to talk about where we're at this market cycle. And we're going to talk about the weekly charts and how they are poised to close out the week. But remember, one trading day left to go. A lot can happen. So let me share my screen before I forget to do it. Let me check in with comments to make sure that my audio is working. Get my spectacles out here. Who do we have on? Franklin. Bob and crew, good evening. I am looking forward to Bob's insight. Thank you, sir. Thank you as always. Seymour Rivers, thank you for that audio check. I appreciate that. Sammy. Hey, Bob. Well, now, Sammy, you're in northern central Italy, are you not, by Milan or no? If memory serves me, it's been a while. What part? I was over there in May. I love that country. I mean, I was all over the place, but man, what a great country. I love Italy. We spent a little bit of time in France, Paris, great city, great time. But Italy, I got to say, was awesome. Verona, I did not go there, but I know it, and I need to get there someday, and we will have a aperitivo. All right. Let's get to it. Let me share my screen before I forget. Like, subscribe, support the channel, leave a comment below. What else? Follow me, all that good stuff. If you're on Twitter, whatever you do on Twitter, do that. All right, let's get to it. Before we begin, folks, 14-day free trial offer, the Contrarian Trader. We're having a volatile week. So far in the year, we're doing awesome, but a volatile week. We are short the market. They're trying to hold this market in, and it's been a volatile week. We're sticking with it, though. Yesterday, actually, the day before yesterday, great day. Yesterday, not such a great day. Today, okay day. It was okay. Tomorrow, I think, is going to be a make or break day, folks. And if you're not ready to join up for our 14-day free trial offer, that's fine. At least support the channel. Head on over to TrendSpider. We're going to be displaying their tool over there, their automated technical analysis. Awesome product. I use it all the time. We'll be using it later on. We get a 35% discount code. Use the link below. And what else? What do we want to talk about? Oh, if you join me, then you get, if you're silver and gold level, you get TrendSpider for free. We no longer do business with Trading Sim. They're gone. No offense to them, but we just don't do business with them. And just TrendSpider now. Okay, and I need to have that amended. I hate having to keep saying that. All right, let's get to it. Let's get rid of this. Okay, let's talk about the week that was so far and the week that's going to be as of tomorrow. So we began the week with knowing that we had a bunch of Fed heads out there. So far, not much turmoil in the markets. Now, we had ISM manufacturing, which came out on Monday, and we've been in a contraction for 11 months, something like that, and we remain in contraction. We got a little bit less worse than where we have been. The expectation was a read for 48. We came in with 49. Any read above 50 is a sign of expansion. And trust me, if that number would have come in above average, above 50, the markets would have taken a nosedive. How do I know that? Well, we know that because on Wednesday, we had the ADP employment number come out and it beat significantly. We also had factory orders come out and they beat significantly. ISM services came out pretty much as expected. What do the equity markets do? What they do? Bad news is good news. Good news is bad news. They forgive me my brain fog right now. They rallied yesterday. Today we had initial jobless claims which came out. The markets were already weak in the pre-market anyway, so I really don't blame initial jobless claims, but they came out a little bit less worse than what was expected, and I think that's what buoyed the markets today. So tomorrow we're going to have the U.S. non-farm payrolls. I call this report the Pimp Mac Daddy of them all, meaning it shows jobs, non-farm payroll jobs, government sector jobs. Most importantly, though, I would argue the most important number to come out tomorrow is not necessarily the unemployment rate. What is most important tomorrow is this number here, U.S. hourly wages. The Federal Reserve wants to see that monkey hammered. And it's counterintuitive. You would think that, oh, you know what? Jobs are created. People are making more money. That's a good thing for the economy. Well, you're rational. You're sane. The Federal Reserve is insane. They need to manipulate the markets. They need to manipulate the economy. To do that, they need to have the middle class shrink and get monkey hammered again, because they can't go to Congress and say, listen, you guys got to cut spending. You got to cut spending. They can't do that. So what do they need to do? They need to take out their frustrations on the middle class. And Congress, they got no problem with that. As long as they have their checkbook to go spend over in the Ukraine, they're okay. They're okay with the U.S. consumer getting hammered. All they'll do is say, blame the Federal Reserve. I'm not in charge of interest rates. So that is the week that is been, and we have the week that is going to be, that is tomorrow. This could move the markets in a very, very big way. Now, every Thursday, we get the Federal Reserve's balance sheet. I mentioned last week, expect this week that we would finally break down below $8 trillion. And guess what? We did it. We are, for the first time in, since June of 2021, we are back down below $8 trillion on the Federal Reserve's balance sheet. Now, to put that into context, the Federal Reserve's balance sheet back in, let's go to Max, back in predate the financial crisis was $800 billion. Now it is about $8 trillion. Think about it. So they are unloading all of this debt onto the markets. They're not buying treasuries. They're not doing that. And that's why you're seeing glimpses, cracks in the foundation. We're going to talk about those cracks tonight. And it's those cracks that are going to guide us towards what is investable, what is avoidable, what you must avoid, what is non-investable. So one of the cracks that is really beginning to appear is the high yield debt market. One of our fellow members, Larry, brought this to my attention. So I need to give credit where credit's due. I do not take other people's credit. So Larry, thank you, sir. And he brought my attention to the fact that the high yield debt market was rolling over. These are also known as junk bonds. You'll know them better as junk bonds. And the high yield debt market, remember, they need to compete with treasuries. So if treasuries are paying a higher yield and are perceived by the markets as being risk-free, well, the high yield debt market is not risk-free. By its very definition, is not risk-free. Therefore, they are in competition with treasuries and they must pay higher yields. What does that do for those companies that are already in the bond market borrowing at distressed rates? Well, they get more distressed. And if you take a look at companies like in the small cap arena, look at the small caps. Let's take a look at a year of the small caps. The small caps are negative on the year. Think about it. They are negative on the year. You would think that with all the up days, the S&P 500 rallying, that it would carry across the rest of the spectrum, but it has not. Not even with the S&P 500. The S&P 500 is up slightly on the year. It's all about 7 stocks, the top 7 stocks located in the triple Qs. So the high yield debt market is under pressure. The small caps are under pressure. There is a tremendous amount of pressure out there, especially as represented by the KRE, which is the regional bank index. And they are down 28.37% on the year. Why? Commercial real estate. Many of these banks they're out of business. They're zombie banks. Except the Federal Reserve is throwing them a lifeline to keep them alive. What else is going on? What else is going on in this market that should send fear? And remember, we started talking about gold and the gold mining stocks. Well, gold, the rally in gold is precipitated by a couple of things. 1, weak US dollar. 2, inflation, or better yet, stagflation, which we have right now. 3, fear. Money coming out of the standard US economy and going into physical precious metals because people are afraid. They want their money out of the system. They want to be able to bury it in the ground in case the FBI comes knocking at their door. Because they went to a school board meeting and they protested their school board and got reported. This is the country that we're living in right now. You think I'm being hyperbolic? I am not. That's the sad part. Then you take a look at this evening, and immediately after the close today, actually 2 minutes before the close, the SEC sues to force Elon Musk to testify in Twitter probe. They're coming after Elon Musk. Why? He reported from the southern border. He has been very, very vocally negative about the Biden administration, the regime, and the attack on freedom of speech. They are coming after him. How do we know that's fairly a confident bet? Why not? Because they are trying to take away the businesses, this arch criminal, this demon of a judge in Manhattan, unfortunately, my backyard, they are trying to take away the business of a former president of the United States who they just threw a gag order on. I don't want to make this political, but we need to get an appreciation of what is happening here, not what may happen, not that this can't happen in the United States, what is already in motion. Think about it. We have a police state which is closing in and closing in rapidly, and you have a 2024 election that is not looking good for the Democrats, and they are looking for the big steal, whether it be war over in Russia. When an empire is failing, they always go to war, or they clamp down on freedom of speech. And what's the outcome of that going to be? What's it going to look like when you have Donald Trump, businesses seized, and you have Elon Musk, whose empire is under threat, where most of his wealth is locked up in the equity of Tesla? What will that say to the global community about the safe haven, the rule of law in the United States of America? It's going to say there's no safe haven there anymore. And you're going to see capital flight and exodus out of the United States. Now, you may be saying, why hasn't it happened yet? Well, I don't think it's gotten bad enough yet. And frankly, I think that most people are in denial. They don't want to see the reality of what's going on here. And the other fact of the matter is that we have been the shining beacon, and still we remain the shining beacon of freedom in the world. But that flicker and that flame is beginning to waver. And where else are you going to go to have the rule of law that we've traditionally have? To think about the United States not being that beacon of influence, that beacon of light on the globe is unthinkable. And I think many people don't want to think about it, because when they do begin to think about it and the markets begin to price it in, which I think they are beginning to do, things are going to get real fast in this economy. If we've wanted to know what it's like to live without having the US dollar as being the go-to currency to do transaction and lifting our standard of living by the virtue of the fact that you've had the dollar, whether it be after World War II, or after the Nixon taking us off of the gold standard, and you had the Bretton Woods Agreement, and then you had Nixon take us off the gold standard, ending the Bretton Woods Agreement, and then you had the petrodollar, which we destroyed ourselves. We did this to ourselves. Nobody was looking to do this to us a year and a half ago, except maybe the Chinese a little bit, but otherwise everybody else is kind of good. But we did this to ourselves. It's self-inflicted. So we have no Speaker of the House of Representatives, which I think is frankly a good thing. You have most Republicans out there, which I do not define myself as being a Republican. I am an independent thinker, and I support the fact that that piece of human waste is gone from office. Whether you like him, dislike him, he was an obstructionist, and he had to go. And if there's any reason why there should be a rally in the equity markets, a rally in the dollar, actually not in the equity markets, but a rally in the US dollar, is because they have avoided possibly sending trillions of dollars more over to the Ukraine and into whatever rat hole that they have decided to waste our money in, our hard-earned tax dollars. So there's a speed bump in Washington right now, except nobody appreciates it because, God forbid, they had to roll up their sleeves and go to work and get to fiscal austerity. This is the beginning of the recipe that is needed, or the medicine that is needed to get us on the right path. Except that path is going to be very, very hard. It's going to take a generation. It took us a generation to get where we're at right now, a couple of generations. It's going to take at least one generation to right this cart and get us on the right path. So we add to this and we move forward and we say to ourselves, what else is out there that is a threat to this market? Well, you have Congress who nobody trusts, and they are a major obstacle to any type of austerity, any type of fiscal discipline. And what will that do? Well, it's going to allow for yields to move up higher. And what else is out there that's a threat to the market that may be reflected in tomorrow's jobs numbers? Thousands of U.S. workers are on strike today. Here's a rundown of major work stoppages that are happening now. And I'll scroll down here. You have 75,000 Kaiser Permanente workers walk off the job. This is, I believe, as of this week. That will not be reflected in tomorrow's wages. UAW workers, 3-week mark, 25,000 on picket line. Striking Hollywood actors resume talks with studios. Southern California hotel workers rolling strikes. I think that's it. So the question that I have in the back of my mind when I see something like this is that if I'm a business owner, and suppose I'm a union-free shop, and I don't want unions in my shop, might I not, or even if I am a union shop, might I not see what's going on here, see the trend, and bump up wages to precipitate any type of union action or any type of unionization of my union-free shop? I would certainly think about it because it seems to be the wise move, especially with inflation the way it is right now. It seems inevitable. With that being known, I'm going to take you a thesis. I'm going to take you back to tomorrow. Tomorrow we get non-farm payrolls. Watch out for U.S. hourly earnings. If they beat on average hourly earnings, this market is going down. Counterintuitive, I know it. If they beat on earnings tomorrow, the markets are going down. That's my call. What else is going on out there? You have the number of searches on Airbnb. People are broke. People are broke. They're worried about getting liquid, worried about real estate. And Google searches for sell my Airbnb surge as travel downturn worsens. People are broke. Traveling is like the ultimate discretionary thing to do, right? The staycation is what you do when you have really no faith that the economy is going your way. So people are dumping their Airbnbs. Not going to be good for Airbnb. I love the company, but unfortunately, they are in trouble. Add to that, the delinquency rate on credit cards is at historic highs. This chart goes back to 1991 and at historic highs. The consumer is tapped. How will they pay out or pay back the debt on their rising credit card interest rates? Well, we'll know that in the next couple of weeks because the big banks begin to report. Then we get the regional banks, and that's going to be lovely to watch. So these next couple of weeks are going to be very, very important, very, very critical for the markets moving forward. Now let's talk about gold. Let's talk about the economy and the stock market. Right now, you have the 10-year yield, which has blown through the upper band of resistance. Now, I would argue that, and there are many folks out there that say that it's gone too far, it's due for a pullback. I wouldn't argue that per se. I'm not adamant about what I'm about to say. I don't think that we're done going up, even in the short term. We had a couple of days of a pullback. You can take a look at today's price action. We're pulling back. I think that this is an alleviation of an overbought condition, and I think that we could easily pop up higher. Why? Because when you take a look at the yearly chart of the 10-year, I don't know if anybody's out there that is a fisherman, and there's a jig. It tracks barracuda, uh, certain fish out there. I use them for barracuda, and that is a diamond jig. I also use them for bluefish. A diamond jig is very shiny, and those fish love to attack it. So in traders' terms, I always like to use pivot points as being the diamond jig to a barracuda. They need to touch it. They got to go after it. So I'm looking at this yearly chart of the 10-year yield. And we've spoken about this in the past. I said that we were breaking out higher. Other technicians out there said, no, we were done a couple of weeks ago. I said, no, I think we're breaking out higher. I still think that we are coming up here, pivot point, 5 handle on the 10-year yield. Equities are not going to like that. If the dollar rallies and the rising yield has been supportive of the US dollar, gold is not going to like that. That's the bear case for gold. It's the bear case for the gold mining stocks as well. What's the bull case for gold? And I'm going to go back and forth here a little bit about bull case, bear case. The bull case for gold is that this is now refreshed for this week. Oh, it's not refreshed. Yield curve. Hold on one second. Wrong chart. There we go. That looks better. The yield curve, it is now updated for the week. New weekly higher highs, folks. We have broken out above the March highs on the yield curve. For anybody that's been a viewer of this channel for any length of time, you know what this means. The steepening of the yield curve is a big, big negative for equities moving forward. So how is that bullish for gold? Or how is that bullish for or bearish for the gold stocks? Well, tale of two equities here, or tale of two products. You have to look at gold as a commodity, which it is. And you have to take a look at the gold stocks, which is what they are, equities. So if the yield curve, which really doesn't impact the market dramatically until you get a unsteepened yield curve, that's around here. Once that occurs, the equity market begins to go into free fall. We know that from history. History has taught us that. What also goes into a correction is gold, not free fall, but into a correction. What also traditionally goes into correction or a free fall, as it did back in 2020, is the gold mining stocks. The question is this: have we already had our correction in gold and our correction in the gold mining stocks? That's a question mark. We don't know. They've had a rough year so far. So we have begun to build a position in the gold mining stocks. We sold covered calls immediately. Thank God we did. And I attempted to buy the January 2025 call options on the GLD to initiate a position. They wouldn't fill me. That's okay. I'll get it tomorrow or the next day. But we're going to begin building a position in the GLD. I always alert members when we put out our trades. So if you're not currently a member, you want to be part of it, 14-day free trial offer, link below, the Contrarian Trader. So I'm warming up to gold, where I've owned it for a while. We sold many of our gold mining stocks a while ago, but we've begun to build them back now, not aggressively, nibble, nibble, nibble. We're waiting for a break in the market because I'm predicting that the gold stocks are going to go down too because they're highly correlated. Why is that? The reason is that if this market sells off in earnest, the S&P 500 breaks 4,200, Margin calls. Margin calls go out. And they will sell everything, either voluntarily or forced liquidation. They will be forced to sell anything that they can. That means gold stocks. So they will not be immune to a major sell-off in the stock market. The beautiful part is that historically gold and the gold mining stocks are the first to rally back. So we'll be watching for that. We're set. We have a short position. We have neutral positions are. So if this market breaks tomorrow, we're good. We're good. We're happy. All of these things here that I went over, all the negatives are calculated into our decisions. Now, do I have a point at which we need to admit fault and say, okay, we got to get out of this? Yes, we do. What else is going to drive up those yields higher? You have the Japanese are the largest owner of our treasuries. There's only one problem. The Japanese yen is in free fall and they need dollars. How do they get those dollars? Uncle Sam, they sell their treasuries. What does that do? Well, if you don't have the Federal Reserve buying up treasuries and you have China dumping treasuries along with the Japanese, well, you're relying upon the markets, the bond vigilantes that are out there, and they are demanding higher yield. Now, you may be saying, you know, they technically looking at the chart, it's overbought. The yields are overbought. They have to come in. Okay, but what's going to cause them to come in? There's really only one thing that I could think of that's going to cause them to come in. Because does anybody believe that the government is done spending $2 trillion a year in excess of what they bring in for the foreseeable future? I say no. If that's the case and you're relying upon the free market to borrow money to invest in a high-risk debt, then why wouldn't yields go up higher? One reason, and one reason alone. It's because the equity markets are in free fall. They are leaving equities and they're finding a home in the bond market. And if they float into the bond market, yields come down. And that's really the only way to make bond yields come down. Otherwise, they're going up, and that's going to send equities down. Either way, I think that this market is screwed. Now, looking at the technicals of gold, gold versus the S&P. This is a ratio chart showing what's doing better, gold versus the S&P 500. Well, gold is down on the quarter. This is a quarterly chart, I should say, is down quarterly versus the S&P 500, but just a smidge, rounding error. And we had broken out back here in Q1 of this year, and we broke down, rallied back. We're still holding the breakout point. We're still holding that support level on gold. It is not broken. Although it has had a very rough year, it is not broken because we're looking at the macro view. Not many people are looking at gold this way. And when you take a look at gold on a monthly time frame, I'm going to go over two charts on a monthly time frame. The first is a candlestick view. We're coming in here on the candlesticks to support. You can argue we're at support. I would like to see an overshoot down to 1750 to 1800. That would be perfect for me. The other way to look at this is that on a line chart, gold appears to be holding 18. What did we close today? What was the low? 1826. It appears to be holding. So this is one of the reasons why I say, you know what, let's entertain this. And the other reason is this, is that you take a look at a daily chart of gold. While it was down on the day, you could take a look at the intraday view. Oh, I got to put up the GLD. Sorry. The GLD, you can see that we're leaving over sold levels and we are beginning to consolidate. So gold technically is beginning to firm up. The question is this a short-term trade? Or if the market breaks, does everything get sold off? We're going to see. We're going to watch. As for the GDM, this is the gold mining ETF, index, gold mining ETF, mixture of junior miners, senior miners. And what did they do today? They broke out. Now, oddly enough, this chart is a chart we're going to talk about in a moment. That's very, very eerily consistent. In fact, let's bring it up right here, right now. And that is the Japanese yen. Descending wedge formation. This is a weekly chart. The GDM chart was a daily chart. Descending wedge formation, a breakout. We knew this was coming. It was either going to get a capitulation sell-off or a breakout. Normally, you break out. So we have the breakout on the yen. What does that mean for the US dollar? It ain't good. The dollar on the week is still up, but it's well off the highs of the week. As for the euro is well off the lows of the week. Let's check out a daily chart here. Yeah, the euro is really firming up here. So the bull case for the dollar is that the euro and yen are strengthening. Those are the two largest component of the Dixie basket, which trades against the US dollar. If the dollar drops, that is generally good, all things being equal and normalized, that is good for gold and the gold stocks. Very good, especially in a stagflationary environment. Now, when we look at the condition of the market relative to whether or not we're going to break down here and get the outcome that I mentioned earlier, that if equities sell off in earnest, then the gold stocks are going to sell off in earnest as well. That's a yet to be seen. We don't know yet. What we can do is say, okay, we can do a ratio chart and see how they're performing relative to the triple Qs, which is a leadership group. We can do that, and we can do that now. But first, before we do that, I want to take a look at the Nasdaq Composite, and I want to point out something. The Nasdaq Composite has broken down lower highs, and we have broken down below this bear flag setup. We did a retest yesterday, today, an inside day. We're probably either breaking out tomorrow or breaking down. Odds favor bears, I believe. And we'll see how the mining stocks hold up in that sell-off. And if they hold up well, we'll be buyers. So this is the Nasdaq Composite relative to the GDM. And the Nasdaq Composite continues to outperform, with the exception of today, the GDM. Let's drill down further, see how that's looking on an hourly chart. And you can see that the Nasdaq Composite has topped out here a little bit and is weakening up relative to the gold mining stocks. Now, relative to gold, my guess is that this is still looking pretty weak. Yeah, I mean, one down day. I mean, the comp is still stronger than the gold mining stocks. That's changing a bit. and the gold in particular. So what else is out there that's going to be a negative for gold moving forward? Oil. Oil is negative for gold. Why? Well, oil is down on the week nearly 10% in 1 week. You could argue that's a crash. Add to that, gasoline prices are down over 10% on the week. And you may be saying, why is that a bad thing? The reason why it's bad is that it's deflationary. And gold does not do well in a deflationary environment. So if commodity prices start coming in, that is not good for gold. So we need to watch these charts carefully. Now, if you get a Federal Reserve, and they've already opened the door up to this, one of the Fed heads that was speaking this week, they've already opened up the door to a little bit of gossip. They plant the seed in the back of the news media's mind about what's coming down the path. And they're going to raise that target, I believe, from target of 2% inflation to 3% inflation. That will send the dollar into free fall. That will probably, unless demand is so bad for oil and gasoline, that should put a bid under oil. That will be an ideal petri dish for the US dollar because you have inflation, a declining US dollar. That is perfect. I'll pause. Let me go to comments here. Juliet City in Italy, huh? It's 1 hour from Milan. Yeah, I know that's up there. Okay, I knew you were up there. Next time, come to Verona. You could still see the Colosseum in the center of the city. Oh, you have a Colosseum there? That's cool. What's up, team? You sound great for day 2. I'm not feeling good, man. I got to tell you, I'm hangry. I got the shakes. Typically, I am. If I don't eat, I have hyperglycemia, and I start going like this, and I get nasty. So, what do we have? About another 24 and a half hours to go in this fast. And I said to my wife, I said, listen, look at me. Do I have a healthy glow about me today? And she goes, no. She couldn't even be nice. So I'm not getting the clarity. So Talon, you told me I'm going to get clarity. I'm going to get all these good things. I'm waiting, brother. I know day 3, we're supposed to wait for day 3. I'm waiting. I'm patiently. I'm diligent. And I got to order up those packs you showed me for the electrolytes. TZ Burton, welcome. RB, welcome. Mr. Pete, welcome. Can you please review SPY and QQQ from the short side? Well, we already did the Qs. The Qs are broken down. Well, not the Qs. We did the comp. So let's do the Qs. So here are the Qs. They broke down on the 3rd, bounced back yesterday, and today they're stuck. They tried to break them out. There was a rejection there. It does not mean that they're not going to break them out tomorrow. And if they do and they close it there, then I need to lighten up on shorts. And I'm always going to keep some shorts on because I have naked put positions that need to get protected just in case a swoon happens. So my take is here. I'm hoping that it breaks down. I'm speaking my book right now. I'm letting everybody know I have a short position on the Qs. I am looking for them to break down, probably down to the 150-day moving average. That's our price target. And we'll make a good coin there. Now, the S&P 500 is kind of what caused me a problem yesterday because they were so beaten up. They were due to rally, they're still consolidating, and this is what I mean by it looked as though they were going to rally. There was no follow through today, so we were oversold. And what many times happens is that you just do this. You know, when the market's going into correction, you get reversals. You're down one day, up the next day. That volatility is a sign of problems for the market. And what we could be doing is just this, wedging out, and we could easily break. You have the 50-day declining now. We are down below the 20-period moving average. The averages are not going in the right direction. This is not a sign of a healthy market. And with all of the issues out there, and I didn't even go over all of them, folks, there are a lot of reasons why. You got to buckle up here and have liquidity, at least. If you're not going to short the market, that's fine. But at least have capital on the sidelines and get off of margin. Consult a financial advisor. Let's do some chart requests. Now, I gotta drink more water. I'm fading out, man. Nice, juicy New York strip right now. Some fries, steak fries. Yeah, that would be good. I'm getting delirious in front of an audience. Okay. Let's talk about I've recently watched videos of police violating people's rights. Yeah, they're if they vote Biden back in and the Democrats back in, the surveillance state, the FBI and the CIA, that's their green light that okay, everybody's good at what we're doing and we're in big trouble. Thank you, sir. Dan DeVal, I was hoping Ms. Jody was. Yeah, where is Jody? Jody, if you're out there, I need to say hello. That's not like her. She always says hello. She does send me a message afterwards saying, "I'll catch you on the replay." VFS. All right, VFS. George Gammon thinks that we have about 20 years of the recurring currency because the dollar's outside. Yes, the euro dollar. The euro dollar market is huge. Dan Duval, possible good news, $1 billion grant to FVS. Okay. There she is, Jody. See how you missed? TC Burton, fun facts. U.S. collects more seniorage in estate taxes. Okay. Yeah, everybody misses Jody. Very popular. Thank you, Franklin. Oh, and I can't even do it tomorrow night. You're supposed to break a fast with like fruits and broths and stuff like that. So I can't even do it tomorrow night. All right. All right. What do we got here? Hey, Bob, late start for me. Falcon, welcome. Whack-a-mole this week on my trades. Yeah, I know. It's a meat grinder week. How can Wall Street explain midday V anomalies like NVO at 11 a.m.? Not quite sure. Crazy week. How do we go over Tesla? I am short. Oh, did we go over Tesla? No, we did not. We'll go over it because I'm short too. I know you did. I know you did. Oh, earlier on. You must have said hello after I noticed that comment. Okay, my apologies. Jody was quite the lady as always and said hello. Okay, let me go to the members area. There was no request there before. Let's see if that's updated. Okay, we do. Thomas. SEDG. All right, let's get to it. Since Bob Desmond is such a high value asset, I'm giving you a symbol BDEZ. Love that. BDEZ. You're welcome, Jody. Okay, let's get to it. VFS. Let's go weekly chart first. I remember this stock. What are we going to do here? What are you going to do? Is this the one that had the intraday squeeze? What was that comment about VFS? They got $1 billion grant. Didn't move the stock. There's nothing really technical to talk about here. It's very weak. It's at the low end of a trading range. If there's any time to buy it, it would be now. I mean, it's in penny stock land. There's not really much to analyze here. So I'm going to have to pass on this one. Tesla. All right. We're carrying a short. Now, to be fair to Tesla, which I don't want to be, Tesla on the week is up, and it bounced off a support level after breaking out last week. It's a follow-through week. Now, the one thing that I need to remind everybody is that this could impact Tesla tomorrow. Elon Musk is Tesla. And if they're going after the Twitter probe, they're coming after Tesla. So it's only a matter of time. I think there's going to be a sympathy sell-off in Tesla. What's it doing after hours? Closed at 260.05. Down fractionally, not much. No real reaction here. But I think that there could be one. So tomorrow is going to be a critical day for Tesla. Now, looking at a daily chart, we held a breakout. We broke out yesterday. We held it today. So we really got to rethink our short on Tesla if we don't get the sell-off we need tomorrow, because this can run up higher, probably to around 265, where you're going to have a lot more serious resistance above. Now, the good part about our short is that we sold puts as well. So as the calls lose value, the puts gain value. Excuse me, I'm sorry. We sold a call spread. So we're both long and short. So long story short, while we lose money on the long puts, we have puts calls that we sold that I can't even get this straight right now. I'm sorry. For those just joining in, I am on a fast. I am so brain fogged out. Basically, we have a call spread on. Look it up. So we have a hedge on that trade. So we can carry it up to 165. If it breaks out above that, we got to get out. So Tesla, still looking good. Volume's going to be good on the week. The close, not a bad close. We held support. So the bet on Tesla is that the market's going to go. If the market goes, Tesla goes, because VIX is spiking up higher. Tesla's very sympathetic to the VIX. If it rallies up higher, Tesla goes lower. SEDG. Solar Edge. Weekly view. That's support. The problem is for these names, solar stocks, is that, believe it or not, they do better when oil is rising because it makes their products more cost effective. And if oil continues to roll over, that's not going to be good for the solar names. Volume is heavy. So we're at support. You could buy it here, but you want to use a stop right below the lows of the week. Daily view. It's wedging out. It's a wedge formation. This is going to get resolved one direction or the next. Normally, it gets resolved to the upside when you're in a descending wedge formation. So, odds favor bulls. BDEZ. Why is that not coming up? Did I write down the wrong symbol? BEDZ. I think I wrote it right. I don't see that symbol again in the chat box. Where is it? Can somebody throw that symbol back down there, please? Let me try it in. Yeah, we could do Den. And if somebody wants to get back to me, make sure that that's the correct symbol. We can go back to it. Go to Den, DENN. You're welcome, Talon. Anytime, brother. Denny's. Is this Denny's the restaurant? Looks like we've stopped going down here. And we've broken out on a weekly time frame. RSI is hooking up. Daily view, we have a very close to a significant breakout here on Denny's. I'm liking the stock. I think it looks pretty good. So Denny's, thumbs up. Especially if it's Denny's restaurant. I happen to like Denny's. Okay. Okay. Sorry, folks. All right, guys. That is it for this trading week. Have a profitable day tomorrow, an awesome weekend. And members, I will talk to you tomorrow. Folks, don't forget about a 14-day free trial offer. And if you're new to technical analysis, you don't know some of the jargon I was using, link below, 5-part video tutorial on my top 5 favorite candlestick patterns, free. Take advantage of it. Everybody have an awesome night. Members, again, I'll talk to you tomorrow. Be well. You're welcome, Jody. Anytime. Have a great night. Mr. G, have a great night, pal.